Welcome back. Here with us on Urban Debate on Mirror Now. India's economy saw a growth of 8.7% in 2021-22, while in the January to March quarter, the growth was 4.1%, better than what most economists had expected. Given the challenges like Russia-Ukraine crisis, Omicron-led third wave, and rising inflation. Now, 8.7% GDP for the full year is above what we saw before the pandemic. So has the economy now come out of the woods is the big question that we will be discussing on Urban Debate this evening. While the Omicron variant of the coronavirus has hurt growth, India has managed to keep momentum intact. This was the first reaction of India's chief economic advisor after the GDP data came out. And to discuss these GDP numbers, I have with me my guest joining us. We have Mr. Subhash Chandra Garg, former Finance Secretary of India, live with us. We also are joined by Dr. Govinda Rao, Chief Economic Advisor, Brickwork Ratings. Good evening to both of you, gentlemen. Thank you for joining us here on Urban Debate on Mirror Now this evening to decode these complicated numbers which tell a lot about India's economic recovery, where it is right now. We have two bright minds on the show today. Dr. Govinda Rao, let me ask you also the question that I asked Mr. Garg earlier. In line, better or lower than expectations, the numbers today?
Well, considering the various facts that have appeared in the last few, in the whole of 2021, 22. In fact, I was expecting a lower growth than that was presented. 8.7%. Certainly it's a sobering thing. I mean, considering. But then the fact of the matter is that there have been several disruptions. It's not just the pandemic. Of course, the effect of war is just to begin. It has just begun. But more than anything else, there have been lots of other disruptions, particularly in the manufacturing sector. After after the chip shortage, in fact, quite a lot of the organized manufacturing sector has had to face a lot of difficulties. And even the government expenditure in the last quarter, particularly capital expenditure, has not been very good. There is a certain trend that is seen that is both in 2020, 21 and 21, 22. There is a the first two quarters, you have the base effect, so the growth rates were high. But then, as in the third and fourth quarters, the growth rate actually decelerates, and there is a certain trend. But possibly we can't still call it a trend. But there are lots of disruptions and changes that have been happening in the economy. One of the things that is giving some satisfaction is that the investment, if you look at the investment growth, things have not been too bad. In fact, gross fixed capital formation this year, for example, in 2021-22, if you look at the growth rate over the previous year, it comes to somewhere about 15.8%. But I mean, again, one doesn't have to take it to a very, one has to be realistic, because as compared to 2019-20, growth rate is just about 3.7%. But so, in other words, the investment is in a sense holding out, but I do not know whether, with all the disturbance that is happening, whether the promised capital investment by the government will happen, because there are lots of expenditure increases that will happen because of underestimation of subsidies and DA payments and various other things because of the inflation that happened. But fact of the matter is, as per the expectations, we did expect that the growth would be somewhere about 8.5, 8.6%. 8.7% is as per expectations. But that expectation itself is a very moderate expectation. I mean, if you really look at the overall situation,
Okay.
I don't think the economy has done all that well. I mean, we are still in a deep slump.
Dr. Rao, so what are the issues that the government should now be extremely concerned about? We've heard the chief economic advisor today saying that, Q4 numbers are better than estimated. He's also said that the risk of stagflation in India is quite low compared to other countries. When we hear government, the chief economic advisor, compare India's situation with other countries and tell us we are doing much better, are we then trying to, in a way, not look at the real problems and wanting people to believe that things are very good, we are out of the woods, but actually we need to look at our problems too?
Well, I mean, I'm not surprised that the chief economic advisor will say that. Obviously, if he says that we are in a panic situation, that's not going to help matters in any case. And he has to defend, and he has to say that things are pretty good, the fundamentals are good. And these are the usual words that the government officials will use. And
Then
there is
why is
nothing.
Mr. Garg saying that we are not really addressing the root cause here? The
Let me
numbers are
let
actually
me let
representing
me
serious deceleration of momentum.
let me talk about that.
Yes.
Let me come to the real thing. You see, I mean, if you really look at where the deceleration has taken place, mainly it's in the construction sector, and that's a worrisome this thing, because that's an employment intensive sector. The I mean, the manufacturing sector has gone reasonably well, but it would have done much better if you did not have the supply side problems, whether it is chips or whether it is power or whether it is raw material availability and the like. And then obviously, with China shutting out, a lot of your imports, from China, your manufacturing sector depends hugely on the imports from China. But in spite of that, it has grown, at about 6% or somewhere about that. Now, but then the growth of and even the financial sector has not grown extremely well. Just a little over 4%, which is not a pleasant thing. Omicron did not play the havoc as the other earlier sort of variant had. And 20% growth in this thing is mainly the base effect. I mean, let us see that, because lockdown was completely complete at the time, and it was, there is nothing to be elated about the 20% growth that we are talking about. It was mainly the base effect. Now, as I mentioned earlier, sort of the lower growth is a combination of many factors, because in the fourth quarter in the last year had recovered reasonably well. So obviously you don't have the benefit of so much of a base effect, and then 8 point. I don't think anybody expected the growth to be more than. In fact, you see, my own estimate for sort of the fourth quarter sort of growth was just about anything between
Right.
3.7 to 4%. So I mean, I don't think one should be alarmed about it. But whether we should keep quiet on that, no, we need to do a lot more of things. In fact, the fact that the construction sector is showing a slowdown, I think there are immediate things that need to be done. Whether, first there is an availability, whether it is cement or steel or any of these, and that will also show up in the first quarter figures for the next year, that is the current year. Now, if you tax cement,
Right.
steel, and everything under this at the rate of 28% GST, and raw material prices have been going huge, very high. And in this particular environment, possibly there is a case for really looking at it, and the revenues have been increasing, and your expectation is also not, your projections are also not very high. And again, this multiple rates, this thing, I think there is no case for having 28% at all in the GST system. I mean, if you want to have really, I mean, even if you see the automobiles, cars, the downstream industries for, it's a very highly employment intensive industry. I mean, we say that only rich people buy the car, but then it's the poor man who gets a job. So one has to look at it in much more holistic manner.
Yes.
And one has to basically, I mean, monetary policy, in fact, you see, they had, you know, they were, they were pumping in the economy, pumping money into the economy, and then obviously the liquidity was very high. So now that's going to happen. Now also you see
Right.
that if you see the wholesale price index is approaching 15%, month on month. Now, I mean, in this particular, the last month, basically means that much of the manufacturing sector has to take a very high cost raw materials, and then many supply disruptions, and then various other factors. Now, particularly,
So deceleration in construction is something that the government should really focus on. I want to give
absolutely.
you last 10
And
seconds,
one
Mr.
more
Garg.
thing that I
Two,
want
three
to add,
pain
that is,
points,
I
according to
would
you, the government should address.
government should address, because the government
Yes, sir.
expenditure,
Dr. Rao. Quickly,
capital
very
expenditure
quickly.
in the fourth quarter, government capital expenditure in the fourth quarter was low, and I mean it didn't grow well, and obviously that has its impact on the construction sector as well. So obviously you need to really, the
Yes. So
government has to
you've
really